if Bitcoin is going up forever, let's just say this is a representation of the price over time. This will have fundamental impact on the way that businesses think. And the implications, if you look at this chart, it is generally harder to earn Bitcoin over time, or if you say it another way, for the same amount of work, you generally will be earning less Bitcoin over time. And so if you wanted to put that on a graph, it's effectively the inverse of the Bitcoin price chart, which shows for every unit of capital or time or energy, over time you'll be earning less Bitcoin. And this really will emphasize the opportunity cost of Bitcoin, the sats flow opportunity cost, which the main point here is every business, every financial decision a business makes will have to be weighed against the alternative of just having the incremental Bitcoin today, with the understanding that it will be harder to earn in the future. So you can think of that as investments a business might make, putting their capital at risk. You can think of it as cost that they might incur, which are foregone sats flows. And my argument is, from a business sense, it only makes sense to defer this Bitcoin if you think you're going to more than make up for it, make more than you're deferring. And we already established it's harder to earn it in the future. So there will be a much higher bar. So now just to visualize it a bit. So here's just a hypothetical fiat backwards venture capital growth profile, revenues in light, profits and lack of profits in orange. Most important point first here is that, of course, we all know we have an inflating currency. So first growth has to keep pace with inflation, otherwise you're falling behind. This often leads to this growth at all costs mindset where you're deferring profits. You can see here, you're losing money quite significantly for years. And often it is also the case that the more you grow, actually, the more you lose. And so therefore, you're reliant on external funding to survive. Compare that to the sats flow model. Most important point on this side of the chart is that this is a fixed currency in Bitcoin, as we all know. And so all you need is positive sats flow, net positive sats flow. You have more Bitcoin today than you did yesterday. You have a greater percentage of the total supply. And so you're actually better off. So all you need is to generate positive sats flow. And since we know it's harder to earn Bitcoin over time, that really pulls forward the focus on generating profits sooner than we've been used to under this easy money world. And although this sort of looks less appealing because it doesn't seem like it's growing as fast as the left side, my argument is you're generating a greater cumulative amount of Bitcoin and sats flow over the time period. A few more observations I want to go through. We already established it's harder to earn Bitcoin over time. So here's my graph or chart of what I think a mature sats flowing business might look like. Implications are the Bitcoin profits that you're earning are gradually going down in time, but since you hold a greater percentage of the total supply, you're having more Bitcoin today than you did yesterday. This is a great situation. Actually, this looks bad because it's declining. That's what we're used to. But this is a great business, and I think there'll be lots of businesses that look like this. These would be great businesses to build, great businesses to own. Observation number 2. So if this is what a profile of a mature sats flowing business looks like, what does this also look like? To me, it looks a lot like a Bitcoin miner, except without the capital intensity, but perhaps without the capital intensity of a Bitcoin miner, and perhaps with better competitive dynamics than what we see. And so my argument is that building or investing in a business that looks like this is incredibly attractive. It already is the scarce real estate of the future, and most people just haven't realized that yet.